Thursday, October 5th, 2023, Maneco 64, home of alternative economics and contrarian views. So we're going to look at a UK bank that seems to be on the brink of collapse today. And we're going to cover CBDCs quickly. I'm going to link it to what's going on here. And before I start, just wanted to thank all of you for your continued interest in the channel and also continued support for that channel. I appreciate it. And make sure you also subscribe if you enjoy my videos and hit that little notification bell. And I'm really appreciative of your interest in the channel. And all I can say is that I'll keep trying to provide good content, valuable content that will help you navigate these turbulent economic and monetary times. So back to the UK banking sector. Well, the bank that's in trouble is Metro Bank, and that's not surprising. It's been in trouble for the last few years. Its share price at one point was at £40 about 5 years ago, and now we're trading at 40p. They've been having trouble with the regulator. And here you go. This was from yesterday in the FT. Metro Banking talks about urgent 600 million capital raise. UK lenders' shares have plunged 50% in recent weeks. And this was from yesterday. It's plunged another 25% today. So what's the problem with Metro Bank? Well, the problem with banks is always that they borrow too much and then they buy assets that really don't cover their liabilities, and usually that's the problem. And in this case is the mortgage business. They're trying to get the regulators to lower the amount of reserves they hold against their mortgage business, and the regulator said no. So, and I'm not surprised because we're seeing interest rates rise. We're seeing not just in the US, but in the UK as well. I don't think we're out of the woods in terms of mortgage rates going higher. And yes, the value of their assets fall. And that's probably why they want the regulator to allow them to have less reserves against their liabilities. And the regulator said no. And Metro Bank, you might not have heard of it if you're outside the UK. And yes, it is called a challenger bank, a challenger to the big banks. That's why they call it challenger. It's been around for just over a decade, but it has 2.7 million customers. It has assets of about 22.2 billion, according to its latest financial reports from the end of 2022. And it's got it had equity at the end of 22 of about $1 billion, and right now its market cap is about 70 million. So the situation is not good. If you happen to have an account with Metro Bank, should you be worried? Maybe if you have a lot over 85,000, which is the insured FSCS amount. But if not, I think what will happen with Metro Bank normally is that one of the bigger banks will come and take over it. Maybe HSBC or Barclays, a little bit like JP Morgan took over. I think it was First Republic in March. Or if no one takes over them, that's a problem. And that's why I think we need to keep an eye on this. It could lead to contagion throughout the banking system. And notice that it's to do with mortgages. And they're trying to raise capital through equity and through debt. And the way the stock price is trading today, it was down. Well, right now it's down 21%. It was down as much as 25. Makes me believe that they're in trouble and no one's going to come to the rescue in terms of investors. So the Bank of England might have to orchestrate a takeover for £1 or something. But it could be something that we need to keep an eye on. And with that, I'm going to go to CBDCs because I think this is one of the reasons they want to bring in CBDCs, because they could see the writing on the wall in '08. They didn't want to have people queuing up outside banks taking their money or their currency out. So that's why they are moving into a digital world. And I think CBDC is a cover for that, because I don't see this banking system surviving. So the central banks will have to take over it. They'll probably keep the banks running, but they'll basically be defunct, bankrupt. They'll just be they'll be nationalized. And the other thing I think is that the control that most people fear from CBDCs, unfortunately, I have bad news for you. I think they already have the control, and they can use any kind of emergency to basically demand your bank to give them information, and they can link up to your account. I think unfortunately that was the reason for what happened in 2001 and later on here in the UK 7/7. They have all the legislation in place to survey you, and they already do. We've seen that banks already have canceled accounts. They freeze accounts. And yes, the politicians, the conservatives, they come out and say, banks can't do that. That's just lip service, people. I wouldn't believe it. So what's the solution? Well, I don't know. I mean, one of the solutions that I always talk to people is to try to be outside that system as much as possible. And it's difficult, of course. Create your own little communities where you might exchange with something else other than their fiat currency, maybe the old silver and gold coins, as I've talked about. And to create those communities, you just have to have some imagination, or meet like-minded people, try to meet farmers and all kinds of people. And there's not much else that can be done. The only thing that we can hope that might happen is some unforeseen event that really ruins the plans of the powers that be. So that's how I see CBDC. It will be an instrument to just re-liquefy the system, because this system doesn't look like it will survive for much longer. Am I saying Metro Bank is the first domino? Not necessarily, but it could be, and that's why we need to keep an eye on this. And Metro Bank, I think I've told you before, it's got 2.7 million customers. So that's a big chunk of business they have there, and it could affect a lot of people. So we're going to look at the markets. Yesterday, of course, Treasury market was in meltdown before the U.S. came in. We saw the 10-year yield almost up to 4.9. It got up to 4.88. And then as the day progressed, and you have to understand that the U.S. banks, they start operating very early, way before the 9:30 Eastern time when the stock market opens. And how do I know that? Well, I used to have clients at major New York banks, and they were based in New York. When I was a broker in London, they used to get in very early, like before 7. So they're always watching things. And it wasn't surprising that we saw Treasury yields drop about 15 basis points from the highs. And right now we're at 474. And the drop in crude oil is suspect as well. Yes, there might have been some news about oil supply and some fundamental news, but the move was massive. So what do I think happened? Well, I think the powers that be are desperate, and they use that hedge fund, the biggest hedge fund in the world that's been around since 1934, called the Exchange Stabilization Fund, which was, of course, funded from when FDR basically confiscated people's gold in 33 and then revalued gold by 70%. With that profit, they created this fund to basically manipulate your monetary and financial reality, and they've been doing it really well since the late 1980s when they created the President's Working Group on Financial Markets, or the PPT. So I think that's what happened. Is this going to solve the problem of rising yields? And well, the other thing I wanted to tell you, and I tweeted about this yesterday, the national debt, the public debt in the U.S. went up by almost 300 billion from Monday to Tuesday. And yes, look at the tweet. This is just like I think a breather for what's really going on, and I expect treasury yields to continue to go up. And more than ever, people, I think it's important to keep hold of your precious metals outside the system. And if you haven't got any, you might want to think about getting some. This is not advice. This is just what I think. So let's quickly look at the markets then this morning. We've got spot gold trading at 18.20. It's down $1. We're right on the lows here. And this is about the time when they start coming in London and doing the manipulation, of course. The high has been 29. As I said, we're on the lows. Silver's up 10 cents at 21.10. Low's been 98. The high 21.31. The Dow futures down 70. The NASDAQ futures down 40. S&P futures down 10. To the currencies, we saw the currencies rebound versus the dollar yesterday. Yeah, and but today everything's fairly quiet. So I won't go through the currencies. Yeah, they're unchanged. And let's quickly have a look at crude oil. Well, crude oil is unchanged. WTI is at 83.40. Yeah, and that's a big drop. Recently, we were above 90 a few days ago, and now we're at 83.40. Brent is trading at 85.61. That's up slightly. And we saw copper also get hit hard. It's down to almost 350. It's at 357, down 0.2%. So what about the treasury market, the bond markets? Well, the 10-year yield, as I said earlier, it's at 4.74. It's up 1 basis point. It's been fairly quiet here overnight. It hasn't really done much. The 2 years at 5.05, so that dropped as well. So that spread that I've been talking about, right now it's at 30. So the curve is continuing to steepen. I think when I first covered it last week, it was around 48. It has been, of course, below 100, that differential, but we're getting very close to zero. And that should trigger alarms, I think, of financial problems or a recession. And what about the Japanese 10-year yield? I think yesterday we saw the 10-year JGB yield go up to 0.8. That's something we need to keep an eye on as well. Let's see where we're now. Well, we're at 0.8. The Japanese, the central bank, BOJ, is losing control of that market as well. So if we get to 1%, that would be pretty not catastrophic, but it wouldn't be good for Western bond markets. And that's why we're seeing not just US yields go up, but German yields, UK yields. A lot of the bond market liquidity in the West has been provided from Japan, because what the Japanese do is they borrow in yen, they sell their yen, borrow in yen, and then buy assets in the US or Europe. But if their yields are going up, they're going to sell also treasuries and other government bonds to also try to stop the yen from going down, and also putting in JGBs, or maybe not. It's a mess anyway. You need to keep an eye on the JGB yields. So let's finish off and look at the UK gilt market. And that's very important as well, especially with what's going on with Metro Bank. We got the 2-year yield at 5%. So they've managed to keep this 2-year yield under control. If it starts moving higher, then there could be some trouble. The 10 years at 465, that's up 7 basis points. And the 30 years well above 5 now. We're at 509. That's up 9 basis points. So with that, I'm going to wish you all a very good day. Take care. Bye.